The bank just approved me for $847,000. I make $52,000 a year. And the scariest part? They didn't make a mistake. This is completely normal. And if you've ever applied for a mortgage, this video might save you from the worst financial decision of your life. Hey, I'm Thomas. 2 years ago, I almost destroyed my financial life because I trusted a number a bank gave me. I'm going to tell you exactly what happened, what I learned, and what I wish someone had told me before I ever walked into that loan office. For 3 years, I had been doing everything right, tracking every dollar, paying off debt early. I brought my credit score from 610 all the way up to 748. And one day my lender called and said, "Thomas, congratulations. You've been pre-approved for $847,000. I felt like I had passed some kind of test. Like the universe finally said, "You made it. You're approved. Go live your life." So I did what every human being does in that moment. I opened Zillow, then Redfin, then Realtor.com, a 6-bedroom colonial with a wraparound porch, a house with an actual home theater, a property with a pool and a hot tub, and a 3-car garage. And my brain just kept saying the same thing. The bank said it was okay. It was not okay. But wait, it gets worse. Here's where the numbers get truly uncomfortable. A loan of $847,000 at 6.5%. That's a monthly mortgage payment of roughly $4,800. My monthly take-home after taxes, insurance, and my retirement contribution? About $3,400. Monthly mortgage, $4,800. Monthly take-home, $3,400. I would have been $1,400 underwater before I paid for a single thing. Before groceries, before gas, before my phone bill, before anything that constitutes being alive. The bank said yes. My actual life said absolutely not. So I had to ask myself the question most people never ask. Why did the bank say yes? Because they didn't make a mistake. This wasn't a glitch. This was completely intentional. And once I understood why, I felt something I didn't expect. I felt angry. Here's what nobody explains to you. Banks don't approve loans based on what you can comfortably afford. They approve loans based on what they can legally offer you. The metric is called your debt-to-income ratio, your DTI. They take your total monthly debt payments and divide by your gross monthly income. Your gross, not your take-home, the number before the government takes their cut. As long as that ratio stays below 43%, most lenders will approve you. My gross salary, $52,000 a year. That's about $4,300 a month before taxes. 43% of that is roughly $1,860 in allowed monthly debt. But my actual take-home? $2,800 to $3,400? That's not 43% of gross. That's basically my entire paycheck. And here's the part nobody in that loan office will ever explain. The bank evaluates you on one number. You have to live on a completely different, much smaller number. Okay, here's the part that actually saved me. It's called the 28% rule. Your total monthly housing cost, mortgage, property taxes, and homeowner's insurance should not exceed 28% of your gross monthly income. Not 43, 28. That's the number where you can still save money every month. Handle an emergency without panic. Go to dinner without doing math in your head the whole time. On my salary, $4,300 gross per month, 28% is about $1,200 for housing. Not $4,800. $1,200. That's a very different house. Let me put real numbers on this. Bank-approved path, $847,000. At 6.5% over 30 years, total paid, $1.7 million. The 28% path, a home around $220,000. Total paid over 30 years, about $430,000. The difference between those two paths? Over $1,200,000. Not to equity, not to wealth building, to interest, to the bank. Money that could have gone into retirement, into your kids' education, into actually building a life. Instead, it just disappears. Quietly. Month after month. For 30 years. And here's what I want you to sit with for a second. I almost didn't make this video, because talking about nearly making a catastrophic mistake is humbling. I thought 3 years of careful saving meant I understood money. I understood some of it. But I had a massive blind spot. And that blind spot could have cost me over $1 million. I ended up buying a house I could actually afford. No home theater, no pool. But here's what it does have. A payment I can make without stress, room in my budget for emergencies, a savings account that still exists, and the feeling, I cannot overstate this, of security, knowing that if something breaks, I can fix it. That's what financial freedom actually feels like. If you're in the middle of a home search right now, I'm talking directly to you. 3 steps. Write these down. Step 1. Figure out your real take-home pay, not your salary. What actually hits your bank account after taxes, health insurance, and retirement? That is your real number. Step 2. Take your gross monthly income and multiply by 0.28. That result is your maximum housing payment, mortgage, taxes, and insurance combined. If it exceeds that, the house is too expensive, full stop. Step 3. When the bank hands you a pre-approval, celebrate for 5 minutes. Then put it in a drawer and forget about it. That number is a legal ceiling. Your 28% calculation is your actual budget. Here's the truth. Nobody in that loan office will ever say, the bank makes money when you borrow more. You build wealth when you borrow less. Those two goals are not aligned. Never forget that. The American dream of homeownership is real. But somewhere along the way, the dream got distorted, buried under marketing that says bigger is better. The people I know who are genuinely happy in their homes, not Instagram happy, actually happy, are the ones who kept their emergency fund intact after closing, who still have money left at the end of the month, who don't lie awake at night doing mortgage math. The house is not the destination. The life you build inside it is. So the next time a bank hands you a number, any number for any loan, remember this. That number tells you what they're willing to give you. It says nothing about what you should take. Those are 2 completely different questions, and only one of them is yours to answer. I'm Thomas. If this made you think differently about money today, that's exactly why I make these. Hit subscribe if you want real conversations about personal finance, not the guru stuff, just honest numbers for real people. Drop a comment. Tell me the biggest financial approval you ever received that felt wrong in your gut. I read every single one. And if you know someone who's about to go house shopping, send this to them right now. It might be the most useful thing you do for them all year. I'll see you in the next one.